The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the German DAX. As you can see, it made a three drive to a top pattern. It's now dropped quite a few points, folks. That's equivalent. Each one of those 100-point moves in the DAX index is equivalent to $2,200. So that's like a $5,000 move in the German DAX. That's a pretty big drop. That's a big thing, and I that is one of the reasons why you're seeing. We'll get into the bonds in just a second, but let's switch over here for just a moment here to take a look at the FTSE. You'll notice that it also completed a big ABCD pattern here yesterday, and it's had a little minor sell-off, about 110 pips, which isn't very much in the FTSE, but that's it. But anyway, the reason why this German DAX is going down, I have no idea. But what it is doing is it's causing the German Bund to really, this is the flight to quality that we hear over here. That was, yes, you're right, Mr. Bill, that was a 60-minute chart. Yes, it certainly was. Both of them, I believe, are 60-minute charts. The reason why I do that is you get to see what's happening presently. You can go back and look at history, but frankly, we want to see what's going to happen today or close to it. That's what the bottom line is supposed to be. Let's take a look here at this German Bund. You can see here that it has gone up and made a new high. This is a 4-hour chart going over, all of January and where we've been in February so far, so you get a pretty good idea. And you can see we're up at this 166.40, and that is in step with what we're thinking about here with the let's get this up here, because you're going to see it above the 78% level here on the long-term weekly chart here on the Bund. So there's a possibility here that we could be wrong in these bonds. I believe this is the emotional part of it, but much like we did when we were at the 151 level in our Treasury bonds. If we take a just a small look, let's get this up here so we can give you a pretty good idea what we're watching here. This is the combination of the U.S. Treasury bond and the German bond. So you can see, where we are here. We're lagging badly. We're hardly making a 61% retracement on our German bond, but we're not in the same position in the stock market. Maybe if we get really weak, there will be a flight to quality, and then we'll be able to see. Someone sent me an email early this morning saying, what are the possibilities that the Treasury bonds are going to go up and make a new high above that area of 177? There is a strong possibility of that. I rate that strong possibility the same as there's going to be a show in Las Vegas this fall featuring Elvis Presley, Buddy Holly, Ray Charles, and Roy Orbison all performing together live in concert. That's what I think the possibility of a new high in bonds would be. But I don't know. If we get above 160, that's also positive. And maybe they're going to have some type of, crazy thing happening. Folks, I want to, let's just, when you do, I don't want to spend a lot of time with the patterns today. It's Friday. We're starting a down week. Market went up and stopped where pretty much it should have in the S&P, the Dow, and the NASDAQ. It's had a pretty good sell-off, and that's it. Okay, Tom. I'll get 2 life rafts ready and a personal life preserver. We'll see about that one. Okay, let's move on. Okay, folks, that's a little joke that Tom says if they make new highs, I have to go out on one of his yachts. And last time we went with one of our good friends from down in Longboat Key. It was a full moon. Oh, my goodness, the surf out there, the water was 10, 12 feet above the mast. I mean, we got soaking wet going into the restaurant. It was, oh my gosh, it was scary. Okay, let's move on. Actually, it was as smooth as glass, but to me it was scary. I don't like boats. Let's move on here and take a quick look here. We got a big report in grains, folks. I think it's going to be a bullish surprise, but I don't know. That's just my guess. We got some orders sitting down there below the market to see if it's going to get down to that level, but there has not been any reports for a long time, so this is going to be an interesting one because most people are really concerned about what's happening with some of these markets. Remember, I just want to go through a couple of quick things, and then I want to get into what I think is really important about trading today, folks. It's not about the patterns. Here's where we were. This is last week we talked about, it was on Monday. We were looking to buy cocoa down there at 21.70. It's moved $1,000 in your favor. We also talked about Ruby brought up the point about the pork bellies, and the hogs, and we want to bring up here to show you the hogs. They moved a little more than $1,000 and have now come back and touched the 61% retracement again. They either hold this support, folks, or they're heading down another, for 3 or 4 cents. So this is where you've got to determine that you either want to try it again, because if you've made $1,000 on something, you certainly want to put your stop at break even, because now you're risking the $1,000 you made plus the $500 that you were risking, and that's not very smart. So let's sort of keep that in mind. We also did the sugar. Ruby told us about sugar at $12.50. It went to $12.50. It's now about $300 or $400. Above where it is. The cocoa is still trading $1,000 higher than it was. So some of these trades work and some of these trades don't. And the whole secret to this is to determine, what your risk is on all this. And I want to spend some time when we come back to the next break here and go over some of the things that, I learned from Mark Douglas and some of the other people that I met along the road, and, give you an idea that you should start trading not with the patterns, not with anything else, but understanding A, yourself, and B, money management. Because in the art of war, Sun Tzu says, if you know your enemy, you are smart. If you know yourself, you are omnipotent. And that is true in trading too. So understand yourself first, because the most important cycle in all this trading is a 9-inch cycle, the one from your left ear to your right ear. You get that cycle right, the rest of this stuff is flat out easy, but not many people spend a lot of time, really doing that. I wanted to bring one other picture of the German buns up here. This is early this morning here that someone was kind enough to send us. I'll bring it up to let you folks see it, because we are looking at that 3 drive to a top pattern at a 1.618 expansion. Whether that means anything or not, we don't know, but that's what the patterns are that we look for. So these are just some of the things that we're looking at here this morning. There's going to be probably a lot of fireworks in the grains today after 10 o'clock Chicago time. I imagine Mr. Z will be in the room and giving us some of his ideas. But it should be pretty exciting, because we haven't had any reports because of the government shutdown. And we want to watch those reports closely. We're going to have plenty of time, folks, because there's a long growing season ahead of us, and there's a planting season. We haven't seen planting intentions yet, and that'll be out in another 3 or 4 weeks. So we got a lot of reports coming, and so you want to try to get in. No, Norm will be with us on what day will it be? Somewhere around the after President's Day, I believe, probably on the 20th. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and since we were talking about Norm Winsky, I thought I'd mention that on September the 4th, actually he was on January 31st as a guest, and on September, he was telling us that on February 4th we had the new moon at apogee, and it should be a turn in the market, and bada bing, bada boom, you can see that we did turn down from that level. We're down a couple of days. In fact, the market has not been down 3 days in a row in the year of 2017 as of yet. It's still early in the day, but it starts out a little lower. We'll have to wait and see. I want to talk a little bit about the money management part of this, because money management is really the key, to what we're doing here, because these patterns, they work, but they're certainly not anywhere near 100%. They never will be, and the reason for that is because nobody knows what's going to happen next. When I first met Amos Hofstetter way back in 1972 at Commodity Corporation, my good friend Jay Cross had been one of the employees there. He was now a private trader, and he had many friends there. We went back to a trip to Princeton to see the old master himself. And on his Reuters machine, and we didn't have charts like we have with these computers. We didn't have computers. All we had was either a Reuters machine or Bunko Ramo machine or an ADP machine to get the prices and stuff. But on his Reuters machine, he had a little bit of a little tiny plastic card that it said, "Is this a valid signal?" The second thing was, "How much do I have to risk to see if I'm right?" And the third thing says, "If you can accept the risk, you must take the trade." Those were the three things that he had written on that little thing there. And whenever he sat down to talk to him about the markets, and I did that maybe 3 times in the years that I met him. He passed away in January of '75. And every time that we had a chance to chat, once was at dinner, a couple of the other times were there on Mount Lucas Road, but he always talked about the psychology of what you were doing, what you were thinking, and how you were handling what you were in. Not how you got in, when you're going to get out, how much money you're going to make. It was all about the mental state of what was going on. It wasn't until 1983 when I first met, Mark Douglas, did I start to realize, the importance of what, the money management and the mental part of trading really is, because it's really quite amazing. When you start getting into trading, you have to realize you have to come in to your final goal to be a trader is to have a foundation of absolute trust in yourself, that you know exactly what you're doing and that you're going to act the way you should. Now, not many people can do all that together, and it takes a long time to do it. The three reasons why most people lose money is, first is lack of knowledge about the markets. That's probably number one. Number two is lack of a trading approach. And number three, which is the most important, is poor money management. Because if you had money management, you didn't even know what you're doing, you could still probably stay alive longer in trading than if you had no money management. So, some people, they plunge, they have two winning trades in a row, and so what they do is they plunge on the third one. Well, that's never going to work, because you don't know when that string is going to end. It's just not going to be there. So you've got to remember, you have to have that foundation of trust in yourself without hesitation, and be able to have a stay free state of mind, so you don't have to worry about that. So you're not worried about anything, and you don't have any problem with fear, because if you conquer fear, you can conquer failure. I've said many times here, Tony Robbins, when I did the work with him, he had the acronym for fear, which is FEAR, false evidence appearing real, because 95% of all of our fears are never realized. They're all just in the back of our mind, making it really crazy. So when you start to do this trading thing, you've got to follow a certain steps or rules that you have to be able to do. You can be flexible in your rules, but rigid in their application. That's the main thing. Because sometimes, do you ever find yourself planning trades that you never execute, and executing trades that you never plan? That's a recipe for disaster, because that's what happens when you're watching all these markets going up and down, up and down, up and down all day. You're jumping around from one to the other. But if you come in the morning and plan your trades, you're far better off than if you just come in willy-nilly and just wait to try to find something. That's really difficult. Think through your trades. Try to plan the ones that you're doing. We do a little bit of that here in the room, but I can't do it all day long. That's what I try to do for 24/7, is to try to find trades that have those things. But again, people have to take the responsibility for putting them on. Like, for instance, that the June hog trade, that was up over almost $1,200 at one time, and yet it came back down to the same price that we bought it. Now, if you've made $1,200 in something and your original risk was $400, your risk is no longer $1,200, it's $1,600, because you're going to give up the $1,200 that you lost, or that you made, plus the $400 you're going to risking. That's not very smart. You've increased your risk factor by 4, and that you should just do the opposite of that. Now, that takes practice to learn to do that, but that's really what you're really trying to do, is to figure out what those things really are. That's the real key to that. So don't ever get into a trade where you don't have an idea what the risk is. I mean, that's just silly, because the only thing we can control in the risk reward equation is the amount of risk. We never know how much money we're going to make, ever. That's just never going to happen. It's and we follow all these fears that we worry about. The fear of losing money, fear of getting out, fear of getting the high tick, all that stuff. Those are things that we have to fight each day. And if you don't plan your trades, you're really putting your trading life at risk, in my opinion. Remember that one of the things Mark used to talk about, that fear causes us to narrow our focus of attention. In other words, when you're in something, and let's say you're in like natural gas, when things were really bullish from a fundamental standpoint, it was going straight down. I mean, those are the ones that kill you, because what you're doing is, if you're watching the machine, and you're watching that little thing that gives you your equity all the time, some of these programs have that, then you're watching the equity go down, you're saying, there's goodbye house, goodbye car, goodbye boat, goodbye wife. I mean, that's what happens. So you got to be able to protect yourself against that. I've been there, I've done that. Most of you have too. That's how you learn, is by trial and error, because there's not many places to go. I try to, when I work with the students in the mentoring, I try to get them to think in terms of probability first, money management second, and then the patterns. The patterns are the easy part. We look at these patterns all day long. My God, when my daughters were 6, 5, and 6, they were drawing these patterns, coloring them, and putting them on the refrigerator. So, there's no mystery to these patterns at all. The mystery is how much do you have to risk to see if they work. That's the whole key of what we're watching here. So I think we ought to pay a lot of attention to that, and I should spend more time. I think I'm going to do one segment every week just about, the money management part and the stuff that Mark, taught me, of things that we're looking at, each day. That's the real key. So remember, to learn something new, you must forget something that is old that probably didn't work. Then that's probably true in trading too. So it's a real key factor is try to learn something new. And that's one of the reasons why I'm still doing this. Heading into the 8th furlong. I mean, it's fun. I meet great people. It's like playing a giant chess game or backgammon or poker each day and trying to select the things that you want. But those are just some of the things that we'll cover today. When we come back, we're going to do a little bit of work on the wheat and a couple other things that we want to look at because we got some big things happening today.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look at this March wheat. This is a spot wheat contract. And what I mean spot, that's the nearest futures. You'll notice that we've made since January a 3 drive to a top pattern. We have 3 very nice little tops there, all formed by the 2 ABCD patterns, as you can see. The D point, as you can see here, up at that 532 level, that was a 78% retracement of the move from late December, well, mid-December down into early January. So that has completed that pattern. And you'll notice the little cycles that we had in there, little 10-day trading cycles. Those have been acting very nicely. We've talked about those before. So here we are looking at the market coming in this morning at 513. And we know that we have all of these reports coming today. We've got a crop report. We got a bunch of supply-demand stuff, export numbers, all that stuff coming in today. And it could be a, big February surprise. What I'd like for you to think about here is if you look at the high that we made back on December the 15th, think of that as an A leg. Then go down to see your last support down there on the 1st of January, right around the 1st of January. That would be your B leg. Your C leg, of course, would be what we made on Wednesday. And now what we're looking at is potential A, B, C, D. And that would take us down to the 1.27 expansion down where those cycles are at the 494 level. That's what I'm looking at here in the wheat. So if I'm willing to be a speculator, and I'm thinking that maybe if these reports are just a tad bearish because of the Chinese tariffs or anything under the sun could have made them bearish, there might be a really substantial sell-off down at that area. Now, I'd be willing to be a buyer down there at that 495 level. That's down just about 20 cents. And believe me, wheat can move 20 cents easily into these reports. Yesterday we moved over 13 cents just without any reports at all. So there's a possibility of that occurring. And if you wanted to defy human nature, go in and look at your soybean contracts for soybean oil and also look at them for soybeans and the soybean meal, and you'll see some of the other interesting patterns that are forming. Remember, in the soybean oil complex, folks, the soybean oil right now is the strongest. They want the oil, the cooking oil and the paint oil and stuff like that. They don't want as much as they do for the feed for the soybean meal, which is also tofu and a whole bunch of other stuff. So that's the key to watching this, because when the meal turns, which is 80% of the soybean plant, that's when you have the big moves happening in soybeans. In the background of this is an outlier event. One of these things that we hear about, the big black swan. Well, the black swan this year in the grain markets could be the fact that we've had 4 years of great crops. And it's unusual for us to have 5 years. So if we do not have a 5th year of great crops, that means we're probably going to have some types of a problem. Now, all the years I've been trading these things, which is well over 50 years, I have never seen a year where we don't have at least 1 or 2 scares of what's going to happen to the crops. They might not come to fruition, but at least you have the scare of a too much drought or too much heat, too much rain. Anything could do it. So there's always that possibility. In addition, you have some other things happening in South America that are a little bit crazy as far as on the political front, which would be very, very interesting to pay attention to. So watch those grains today at 10 o'clock. I'm sure Mr. Z will be in the room giving you some ideas of what it's looking at. The fact that we sold off just a little bit in the wheat, we sold off in the meal also, but not too much, and also in the beans just a little, nothing really dramatic. But after this report, there could be some really dramatic moves of some of these things, and that's the key to watching, what we're looking at in these markets, and that's the whole principle of what we're looking at in here. Okay, now, I will bring up the soybean meal for you just to give you an idea of where we are. We're very, very close here in the soybean meal. Oh, just give me 1 second here, and that's what we want to see. Good job. Hold on 1 second here. I want to see that. Hold on. I want to see that little bit of rally here in the stock market. By the way, folks, that rally we had yesterday in the S&P when we got to 2705, that was a 382 retracement of the move down. So that's very important, that number of 2705. We close above that. That tells you that the bull is back. That's really a very powerful thing. So keep an eye on that. Okay, now someone's asking me about General Electric. I have no idea. They've had good earnings and stuff, and people are starting to be interested in it again. But I don't know where it's going to go. There's so many other things that you can do besides General Electric that it's probably a very low risk. But again, I have virtually no interest in that. If you want me to, I will I will pull up the chart. First, I want to show the soybean meal. You can see that happening without too much trouble. Give me about, takes about 6 seconds or so to get to General Electric. That's 5, 4, 3, 2, 1, and there's General Electric. And we've had a pretty good move. We actually have gone up about, well, we went way above the 382. Oh, we're at real critical level now. This is interesting. Good call on this one. Thank you for bringing this to my attention. Hold on just a second. I want to show you the chart here really clearly because we're right up against, right on the money yesterday. Hold on, take a look here. Here's General Electric. Oh, what's going on? Oh, dear me. Just give me a second here, boys and girls. There we go. Thank you, Terry. Anyway, you'll see here where we broke down from at that 1.618 at $11 a share. That's what we hit the other day. We went up to 1088. So if we get above 1088, this thing could have some legs. But right now, I can't be very, very bullish General Electric from this level. We've gone from 6.5, 6.55 up to the 1093, which was that low down there. You see where the $11 a share was a 1.618 expansion there. Once we went below that, now we've rallied back to touch it, and we rallied back 35%. That market's overbought no matter any way you look at it. So that's a key figure to pay attention to as far as I can see. Whether that's true or not, I don't know, but that's what it looks like. We'll have to wait and see. Oh, so someone's asked a question about the Canadian dollar. That's a real interesting one, folks, because we've been in this Canadian dollar for quite some time, and we put some extra. We added some extra contracts for the 24/7 folks. We now have a triple position on, but yesterday we had a situation where we were selling at the 78% level, and the market went against us a little bit. Well, we had a 35 pip stop on that, and it missed our stop by 7 pips. And then today with the news in the Canadian, there was a big move down that, put you into a nice profit objective. And so the way you'd handle that, just like if you were doing pork bellies, cocoa, sugar, any of those others, are not pork bellies, but the June hogs, that's what you do is you put your stop at break even now and not worry about it, because once the market gives you that money, folks, that money is yours. They have to take it back from you, and they can do it very easily. So make sure that once you've made $1,000, don't be silly enough to think that it can't come back and tag you, because it certainly can. That's the key to doing this, is you got to always be protecting yourself. It's all about how much you're risking, not how much you're making, folks. That's the key level to look at here. So when we get back, I want to share with you a couple other things that are in the market that are very important. We talked about them on Monday, but we're going to redo them today because they are important enough to, I think, bring to your attention. They're about the FANG stocks. So when we get back from this break, we're going to talk about the FANG stocks a little bit.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
All right, folks, we're going to take a look at some of these FANG stocks here because I think it's important. You notice that the Apple has been rallying for a month ever since it, well, remember the rest of the market bottomed on the 26th of December. Apple didn't bottom until January the 2nd. It's also has not made a 38% retracement yet, which makes it one of the weaker of the FANG stocks. So, you know, it's been the darling of the business for a long time, but maybe that's changing. If we take a look at the next one, which is the big gorilla in the room, and that's Amazon, you know, we've made a 50% retracement of the move down. We topped at $2,050 a share, and we came all the way down to $1,300, and then we rallied up 50%, and you can see here that we've been making, we actually topped last week, and we haven't made new highs as of yet. So this still has a very bearish pattern since that bottom that we made in late December. That's another one. Then third one we're going to look at, of course, would be the big Facebook, you know, the one that gets most of the news now that Apple's under the gun. You'll see here that Facebook went up to the 78% level. It still has not backed off very much. You know, it got up to 172, and, you know, we'll see if this is going to be it. We left that big gap here. There was a news announcement, of course, and the market gap from 150 to 165. You can see gaps all over this place, and especially the island reversal gap, you know, that, you know, we had, you know, way back in July. We were alerting folks to that there was a possibility of that happening, but no one knew that there was going to be something that dramatic happening. So it's real interesting, you know, what's happening here. But we have rallied back, you know, we rallied back 78% of the move from July, and that's also exactly 50% from the high that we made. So we've had a 50% rally in that one, 38% rally in Apple, 50% rally in Amazon and Facebook. And as we continue our journey down the FANG trail, we'll take a look at the Google. And here again, you're going to see Google, which is also the bigger, one of my favorite companies because it makes it so easy to get research in. You'll notice that we missed the 61% retracement of the high. Up at that 1155, we got to 1147, so we missed that by a little bit. And of course, we've had a little bit of a down move, so that's telling you that there's a possibility that that is going to be a you know, move, you know, to the downside. We'll have to wait and see. The key level to watch today in that S&P, folks, is 2710. If we get above that, that means we're probably going to close sharply higher today on a Friday. Let's take a quick look at the Netflix. We want to get that one in our little armamentarium here to look at it. You'll see the fact that we rallied up to that 61% retracement of the highs we made way back in June. That came in at the 352 level. The key level to watch here, folks, is where you see where that marker says Dow down over 600 points, and you see that little red box that the fact that that Netflix was up strongly that day with the Dow down 600. Folks, don't ever, ever sell anything that is up on a really, really bad down day. I mean, that's telling you that somebody knows something about that stock, and they're not telling you, but they're buying it. And so that's what you worry about in those bars, because if they're going up, there's more buyers. If the bars are going down, there's more sellers. That's the main thing that you really need to know. So that's what we're looking like in the FANG stock. So let's remember that they don't look very bullish. Maybe we get back another 250, 300 points today in the Dow, and everything looks great. But we have to do one thing at a time to see if that's going to happen. And right now, we're not doing very much. So take a quick look here with a couple of minutes here before we had a little bit of a move in the S&P, but the overall bearishness of the stock market is really quite apparent. And if we close below 2665 today, which would be a pretty big day down, that would be a real bad trigger as far as more movement to the downside. Remember, this is only the first day down, and usually they runs in cycles of 3 to 5 days down, so we'll wait and see what's going to happen with that. Another one that looks really interesting that we've been fortunate enough to be in, and that is the crude oil. If you remember the crude oil, we had that big 382 retracement up there at that 55.82 on the daily price, and we focused on that in the newsletter to tell you to be very, very aware of what's going on in the crude oil, and that's had a pretty big break. We've broken over $3 a barrel in this week, and that's a pretty big move. That's that's about an 8% move in crude oil in just 1 week. And when it's coming from that 382 retracement, that even means a great deal, because that was so spot on that it's really something that you have to really pay attention to these. Well, that's my opinion, of course. But if you look at that 382 retracement on the crude oil on the daily chart, it was spot up there. The high was 55.71, and the number was 55.52, I believe, and now we're trading at 52.80. So it's really been a pretty big move to the downside. Let's talk a little bit about the one that hasn't worked. We've been bearish bonds. They haven't gone very much, but we're trading up at the 78% level of that, from that 147.02 high. And if we have a really bad day, there could be some more flight to quality, and we could get above the 147.02. But I don't believe we're going to get above that 151 level we made several weeks ago. I really don't believe that. And if that German bond ever turns over, because that's a big market over there, that will pull our bonds down also. And so we're watching that one with a great deal of interest, because if we get above 167 in that German bond, I would have to say, something's not right in River City, and we have to be able to see how that thing is going to be. That's how it's going to be. So that's that would be great. Anyway, let's keep an eye on a couple of these other things that we're watching here. The main thing today, folks, is a lot of you folks are grain traders, and if you're not, it's fun to watch it to see how they react to the. To see how they react to some of these. I want to show you something from our friend Mr. David White in the room here, TFNN, and we talked about this on Monday, and look at this, how well this little oscillator that he used predicted there was going to be a down move in this. We had those 3 lower tops that he talked about, and now we've started the down move. So this is a very interesting tool that David has, and he makes that available to us. So, pay attention to the guy, because he's a very well-read individual, and certainly knows the markets. That's neither here nor there. I do want to bring one more chart to our attention here. This comes from our friend Mr. Z, and he does a lot of beautiful esoteric work. And this is one that we don't trade very often, but we are starting to look at it more, and that is this natural gas. Now, because there's such big moves here, what you're looking at, you'll notice that from that move down, we went all the way up to 492. We've came back to 255, and that's back to the 61% retracement, folks. So we want to keep watching this natural gas, because we're down in an area where we should come into some pretty good support, I would think. So we'll see if that's going to be the case or not. So that was, it did not post. Let's try it again. Let me get it over here. Let me know if it didn't post. I'll have to figure out a way to get it back to us another way, but we'll do one thing at a time. There it posted. Okay, we're good. Anyway, watch this at 255 in the natural gas because it's got some, fact is, for the newsletter this week, that's one of my things on my watch list is to go and look at the weeklies and monthlies on this because we're with that big move from 492 back to 255. You know, that was $25,000, folks, in a month. So that's something you need to pay attention to, I would think. 877-927-6648. We'll be right back.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a two-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to pay close attention to today's close in the stock market because if we close badly today, this will be our second down day after coming against that really strong resistance we had up there at that 2730 in the S&P, and also we had that in the NASDAQ a little above 7,000. So this will be something that will be important to watch over the weekend. We'll review this over the next couple of days and have it in the newsletter for you Sunday so that you'll be able to be prepared Monday. We'll also have some comments in the futures section of the newsletter about the grain reports and some of the things that we're looking at in the grain markets. And we have some orders setting way lower, of course, in the market to see if we get that type of a reaction, but we'll have to wait and see. They're all based on the patterns. That really is what we're looking for. Now, just for a quick summary here, I thought I'd bring this chart up of the natural gas just as a quick review here, we're trading at around 257. You'll notice the last price we had here on Monday was at 273. We're now at 257, and we have a really strong possibility of getting down to 245. Now, that's not very far away because that's only 20 cents, and this thing can move there in just a heartbeat. But at that point, you would have an ABCD structure lined up perfectly. And the ABCD comes in at actually 255, which is the number that Mr. Z was looking at. So that 255 is a really critical number. And when I update the chart, of course, over the weekend, you're going to be able to see that that's one of the things that we're watching. So it's been a big move. But since November, when we went up to that 460 level, we have dropped. That's been a $20,000 move, folks. November, December, January, into February, in the midst of the Arctic freeze. You know, so you had tremendous bullish news, and the market didn't react to it. Bada bing, bada boom, and then you'll see what's going on. Hey, thank you, Steve. I appreciate that. I hope the earthquake got through you too much. And Arch Crawford and I were talking the other day about you. If you ever get down here for the spring, you know, please give us a call. We certainly like to see you again. Okay, folks, we'll be back on Monday, 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.